Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and this morning I have to do a Little League work day, and I'm really not looking forward to it. It's a little chilly, and I really just don't want to go work outside. That is not my thing. I'm more of a nerd that sits behind my computer like a lot of you, and I like to just do my thing and watch baseball on TV or something like that on a Saturday, but I do not like having to go and work at a Little League. But this is what I signed up for. It is a major baseball day in my family today. But anyway, I was going to show you the market to start out. The market has been pretty flat, and that doesn't seem interesting other than the fact that the stock market has been getting smoked and killed this week. And I guess crypto got killed a little bit, but not by crypto standards. The crypto market, if you've been around for a while, you realize it can be a lot worse than it was this week. But what's important is I've spent the week buying these dips, and it's if you're a true believer in XRP, you see the price as just a distraction like I do and like Glenn Hutchins does, then you're just buying. Okay. So moving along, and by the way, XRP is at 23.5 cents. Okay. I've been doing, kind of gotten off course a little bit this week, going and doing some deeper, looks into different things. So I wanted to kind of go through the news and get updated today. The first thing I wanted to tell you about is Sologenic. These guys, I wanted to just update you on what they're doing. Remember they had their public sale this past week, I believe, the Sologenic token. And then this is their CEO, Bob Ross. And he says, I'll release a complete list of the stock exchanges that Sologenic will tokenize assets from them shortly. The exciting part is that there are 31 global exchanges and even more assets. Yes, the Solo core team is building an empire on the XRP ledger. Now, this is why I keep covering this. These guys, they're contributing to the whole XRP space, and so I think they deserve to get some coverage on this. These guys are really pioneers in tokenized assets, if you really think about it. And the crypto utility guy sent me this. This is the Sologenic roadmap. I may have seen this in the past. Let me get this and let that be bigger. But their roadmap, if you look, what they've done so far is at this point, they've done the public launch. The next thing that's going to happen is the Solo trading enabled, says mid Q1. They may be doing this already. And then the Solo crypto card. They're going to have a card where you can actually use your card to spend your Solo, and I think XRP as well, if that's what you want to do. Then decentralized exchange is going to launch in Q2. And then this is the interesting one, Sologenic securities trading launch. So the whole point of the Solo token is that you will be able to buy fractions of shares in companies like Tesla. And there's a big long list, and I'm sure they're going to be releasing that list too of the different stocks that they're going to tokenize. And then all of a sudden you're going to have an option that has never been there in the history of stocks, and that is to buy fractions of shares in stocks. This is one way that the world is about to change. All right. I got a little bit of a sore throat here. I just told my wife my throat feels sore, and she said, no, you don't have a sore throat. In other words, don't say anything about being sick. We don't want to hear that. Then Ian Northing, now this is something we covered from the Ripple drop, but it's worthy of saying again. This is what David Schwartz said in that Ripple drop. Ripple is developing a feature that could allow users to mint asset-backed tokens directly on top of XRP Ledger. The firm's tech chief has said, this is a big deal. The idea of tokenization of assets on the XRP Ledger, that is a huge deal. So that's something worthy of bringing back up. Also, Chinu Patel, at Chinu Patel 29. Now here comes all of the economic As many of you know, we've been in we're in an economic storm right now. You know what it's because of, but I'm not allowed to say that word. But this is from Cryptopolis, under 1% on the 10-year. Think about that for a minute and what it means for anyone seeking yield. Cash is trash. Stocks are getting battered. Commodities are falling. Bond rates are at historic lows. Cash will move to non-correlated assets. And remember, folks, we talked about it, I think, yesterday. Traditionally, a safe haven asset has been treasury bonds. But I showed you the U.S. debt clock yesterday and what a joke treasury bonds really are. But if you look at what he's saying here, you can see the formation of people, why people would say, well, I'm not going to put my money there. But listen to what this guy says.
Do you think yields could go, if you think bond prices are going to go higher?
I think we could go under 1% on the 10-year. We're already under 1% on the 2 and 5-year. Yeah. Who would have thought that? And the Fed's probably going to have to do something. But even so, as I said, it looks to me like 2 rate cuts are already baked into the market. I think people are, going to anything they can where they get some kind of return. What I really think this is going to hurt here is seniors, pension funds, insurance companies, because of the absolute value, not the relative value, the absolute value. When your yield's this low, how are they going to make any money?
So anyway, and I'm not by any means saying that senior citizens are going to start pouring into XRP or anything, but I do believe, just imagine what would happen as people are exiting this stock market. Imagine what would happen if just a tiny percentage of some of the money that was exiting began to flow into crypto. I mean, there's only, 100, I can't even remember how much it is. Let me look. How much is there in the crypto market right now? It's not much. It's 247 billion, and we're talking about trillions in this stock market. All right, moving along. Brian Melancholy XRP at Mike Honcho _11 sent me this. This is from the IMF. I'm going to play the first 45 seconds because I think he may say some words that I'm not allowed to talk about on this channel.
We are, of course, providing policy advice to member countries as needed on economic measures, monetary, fiscal, and so on. We are assessing the impact, and we will have something much more specific to say on that as we run into the April WEO. We have various instruments, financial instruments, that could be used. We have the rapid financing instrument and rapid credit facility to support countries with balance of payments problems.
Okay, so I can't show you any further because he talks about the word that you're not allowed to say. So, but I wanted to make the point here is that our financial world is now at a place where instead of looking to free markets, the world now looks at central banks and says, please help us, please lower interest rate, please save us. That is not what, at least in the United States, that is not how this all started. That is not what this was meant to be. Every time you have a down day, everybody's asking the central bank what they're going to do. It's ridiculous. This is never where this country should have ended up, but this is where we are, and it is a joke. And everybody knows it's a joke. Behind the scenes they do. They would never admit it because they're all making money off of this game, and it is a game. Okay, now this was interesting from Matthew Linai. Apple and Microsoft lost more value in 1 week than the value of the entire digital asset space. Hold still, early days. Be happy you know of this opportunity. And that is exactly right. Look how much, this is the decline in valuations this week. Apple, 173 billion. Now, folks, I want you to, while we go over this, think about the entire crypto space is 247 billion. All right. Apple by itself lost 173 billion. Microsoft lost 155 billion. Google 115 billion. This is 1 day or 1 week for these stocks, folks. The entire crypto market is 247 billion. If you've ever wondered whether you're early, if you hold XRP right now, there's your answer. All right, moving along. This is, you remember Zero Hedge got knocked off of Twitter, and so there's all kinds of accounts popping up. I don't know if this is the official account or not, but Free Zero Hedge put this out, which is a Zero Hedge article. There's just one question: will the Fed activate a coordinated central bank bailout on Sunday? Well, I can promise you that the banks and the Fed are having their meetings this weekend. I can remember from the financial crisis, the meeting that I remember the most was the one where they had all the bankers in the room, and they said, "You're all going to take these bailouts, and you're not walking out of this room until you do." And I thought, wow, what has happened to our society when this is what the government is allowed to do? Just disgusting. And then I think it was right soon after that where the Treasury Secretary gets on the phone with Warren Buffett and says, "We need you to bail out Goldman Sachs, and don't worry, Warren, we're going to give you assurances." Okay. I mean, that disgusted me too. All right. And then there's this from Sven Henrich. If central banks are looking for an excuse to go the coordinated intervention route, there it is. And he's showing this tweet: China's manufacturing PMI drops to the lowest on record. Now, this right here is what really is scary to me. Is the not the word I can't say. That's not what scares me. I personally believe that could very well just go away with the changing of the season. But what scares me is the supply chain interruption. I mean, I think it's already happening. That is the scarier part. Imagine when you can't go to the grocery store, there's not things on the shelf. That is the scary part of this to me. All right. And then I forgot to show this. This is from I Am Legion, and this is a clip. This guy right here in the clip is a guy. He's the co-head of product GTS EMEA for Bank of America. It's a very short clip, but it's worthy of your hearing.
This is another one, not just a real-time message of the payment, but actually the movement of the money as well, real-time. And the interest is...
Okay, so he says not just the messaging, which would mean SWIFT, it's the real-time movement of money, which would mean what? I think you can figure out where that goes. But he's at Finextra, which is a fintech conference. Okay, and then at ECOSSEXRP1 sent me this from Digital Assets Daily. Ripple now lists 450 plus customers. So they apparently got this off of their website. Well, just imagine, think about that. 350 employees, 9 global offices, 450 customers. I mean, it's almost like a company that's ready for IPO, right? CS May 144K sent me this. This is further stuff. I've noticed several themes coming out of Ripple. One of them is that David Schwartz all of a sudden is telling you Bitcoin is not it. And the other is that they're talking about Ethereum in the mix. And there's another one, and that is that they're talking about the bread wallet a lot, which yesterday I gave you my theory. I thought that might be something that's going to be tied to a cold storage like PolySign. But here, Real XRP Boy says, serious question, can Bitcoin innovate and change its algorithm? Only asking because proof of work seems to be a technological dead end, which he got from David Schwartz. David Schwartz comes in, doubles down or triples down, and replies and says, introduction of SegWit shows it's possible, but I wouldn't expect any significant innovations in Bitcoin's layer 1 unless something goes horribly wrong and forces it. Bitcoin has bet that its L1 is good enough. So far, the market agrees. This is the most interesting line in this. So far, the market agrees. Almost like he's saying it's not going to agree for long. I agree with him. Now, my father, the official father of the Digital Asset Investor channel, asked me to do something, and I want the community's help. Some of you guys out there, like I Am Legion, please show me some things on this topic, because my father is old school, and he asked a very good question that I think we all probably know variations of the answer to. But it's a question that is worthy. I have my thoughts on this, and I'll give them to you here. But he made the comment to me. He said, basically, you know, none of this global reset or financial reset, you know that it doesn't happen without Goldman Sachs and the boys, as well as JP Morgan, getting their piece of the pie. And I agree with him wholeheartedly. And he wanted me to go more in depth on any ties to Goldman Sachs and JP Morgan that Ripple has. And he was making the point because he was making the point that the R3, that was the bank consortium that came together, and I showed it the other day, 3 of the banks that left, I believe, were JP Morgan, Goldman Sachs, and Morgan Stanley. Well, my answer to him was, the obvious to me is that these guys, in their Wall Street arrogance, probably stayed just long enough to find out what they needed to know, and then they said, well, we can do this ourselves. We're not going to depend on these guys. And then they left to go do their own thing. That's always been my thought pattern with these companies, but I believe that all of these companies, with whatever they're working on, will probably plug in and work with R3. But like I said, there's a lot of you guys out there like I Am Legion that can probably put everything right here in my lap, and I can, in my next video, I can show what you've come up with, because I know a lot of you guys have already found this kind of stuff. But I'll show a couple of things that are interesting having to do with Goldman Sachs that I found just looking around this morning. Because yes, my father's right. When this reset happens, Goldman Sachs will get theirs, JP Morgan will get theirs, Morgan Stanley will get theirs. These guys are the money men of the world. And so, yeah, they'll be in the mix. But the first thing I want to show you is this. Remember Brianna Madigan? She was in the Ripple drop that I showed the other day. Well, she's the VP, head of global institutional markets for Ripple. Well, look who she worked for before. I think she was with one company before Goldman Sachs, but she was the head of institutional wealth services for the Americas of Goldman Sachs. And before that, she was their global franchise manager, vice president, fixed income sales. So that's one point I wanted to make. And this is the same Brianna Madigan that we saw in the Ripple drop.
For market stability and health, then.
I think even to take a step back, liquidity has a lot of components that are important to kind of address. So one of which is immediacy. So I think about that as how quickly can I get access to markets and how quickly can I trade into and out of the.
Anyway, I'm not going to go through that again, but I just wanted to show you that. But also, let's look at this. I found this from Stephen Bull from the DF. You talked about Goldman Sachs in the video. There's another interesting fact that a Goldman Sachs employee was one of the authors contributing to the original white paper for XRP back in 2014. I have never heard this before, but I saw it right here. Apparently, this person right here, Roman Leal, former Goldman Sachs payments analyst, according to Stephen Bull from the DF. Now, he's got an article here. Let's pull this up. This is from, the article doesn't come up any longer. But anyway, he says that this guy helped contribute to the original white paper for XRP. I've never heard that. That's interesting. Okay, and then there's this. Remember how the guy from R3 was not allowed to talk about Ripple? Remember that? Well, as it turns out, there's some Goldman Sachs guys that aren't allowed to talk about Ripple as well. When can we expect adoption of XRP X-Rapid? This is at the Penn Blockchain Conference in 2018. Danny Aranda from Ripple answers the question because Goldman Sachs is not allowed to answer. This is Danny Aranda from Ripple. Listen to this.
XRP, but directed at Brian.
This is one of the Goldman Sachs guys. I don't know if the others are or not.
Specifically, it's clear that Ripple and other blockchains are useful for banks. But what about these so-called bridge currencies? And it's unclear whether...
Take note, when they talk about Ripple and XRP, he nods his head, yes, you're right. But then, listen to what he says.
Banks like Goldman are actually going to use it as part of their treasury. Can you give a clear answer to that at this point?
That was pretty specific, that banks are going to use this as part of their treasury.
Yeah, I mean, unfortunately, it's we're not in a position at this point to say, to talk a little bit about sort of, digital assets and cryptocurrencies. So I can't, unfortunately, at this point.
I can address something around that. In any startup, you have to think about sequencing and timing and crawling, walking before you run. So a giant bank like Goldman Sachs or HSBC, who have literally like the need to move tens of billions of dollars a day, crypto markets are still very thin to use that for payments. So crypto markets today are somewhere between $10 billion to $20 billion a day is actually moving in and out of them in dollar kind of notional value. That's still small compared to the larger FX markets on the fiat side, which are about $5 trillion a day. And they've grown a lot over the past year, so it's not hard to imagine that within 5 to 10 years they're competing with those traditional markets. But where you start is with really low value payments. And that's why we're partnering with firms like Western Union and MoneyGram. These are companies that send, their average transactions about $200. And that can totally be accommodated by the liquidity that's happening through Bitcoin, Ethereum, XRP, and that's where we're kind of starting. So I think you'll see kind of this gradually move over time towards these more kind of institutional use cases, but it will take time because these systems need time to scale.
So what's interesting there, two things. First, the Goldman Sachs guy said he's not allowed to talk about Ripple or XRP. And then Danny Aranda basically says, actually what you're seeing now, and if you go back, remember, folks, if you go back and you look at, I'll pull this thing back up. If you look at the document that I showed you the other day, I'll pull it in here, and you look at the timeline that these guys from Everest had put out. It says Ripple becomes the standard for, blockchain solutions for capital markets, trade, finance emerge, So anyway, and remember, Ripple called 2020 the year of the digital asset, right? So it's just the beginning. So we've got MoneyGram, and we're watching all the liquidity start to go crazy. So you're seeing all this. And they said that you would start with things like MoneyGram and these types of things, and that would be the beginning. So you're right at the very beginning of the liquidity that's about to begin flowing more and more through the ledger, and that is what's exciting. Okay, I wanted to finish my point on Goldman Sachs with this. Remember this tweet? This guy was walking down Wall Street. This is on February 11th, and he happens to bump into Brad Garlinghouse. And here's what I said. I wonder if potential underwriters are courting Brad Garlinghouse for the Ripple IPO. I would be buying him the finest steak tonight if I were Goldman Sachs and the boys. Well, here's what I believe. I believe Goldman Sachs and Morgan Stanley and JP Morgan and these guys, I believe that they did, we know they left R3. I believe that it was their Wall Street arrogance, and they said, we'll have our own things. We know that JP Morgan has, I think it's called Quorum that they're working on that's built on Ethereum. I believe all of their solutions will plug in and it'll flow right with, it'll probably plug into R3 somehow. But the bigger picture is this. I believe that don't be surprised, and you heard it here first. Don't be surprised if the underwriters of the Ripple IPO, which would end up having plenty of Ripple stock, don't be surprised if the underwriters of the Ripple IPO end up being a Morgan Stanley or a Goldman Sachs or a Merrill Lynch. I would probably, if I was putting my money anywhere, I would put it on Merrill Lynch. But don't be surprised if it's joint underwriting. Who knows? We will see. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe and hit the like button and tell your friends and family that the digital asset investor will be having a work day and freezing his butt off today at Little League. Thank you for listening.